the large production of debt and debt monetization is an area that I specialize in, and in terms of understanding as a global macro investor. And that produces what we're seeing in a mechanical way, which means that the value of money goes down. In other words, you could look at it very simply that if the quantity of money and credit, which is buying power, increases faster than the quantity of goods and services and financial assets, that the prices of goods, services, and financial assets will rise, the value of money will go down. And so we see that happening now. We're in the part of the cycle for that, in which everybody received a lot of checks and all that money coming in, and people's paper net worth then went up because you got more money. And we're not used to inflation. But what is happening is then you're in that part of the cycle where there's that inflation pressure in goods, services, and financial assets. And what that has to do is then cause reactions. And those reactions are along the lines like people no longer will want to hold cash investments. They will not want to hold bond investments because those will start to have a negative real return. And as that inflation psychology and that investment psychology changes, it changes the movement of money. So it worsens the supply-demand picture for money. So you are seeing the beginning of a supply-demand imbalance.
Do you think we've passed the tipping point? Do you think that the role of the dollar as global reserve currency is long-term fundamentally unsustainable because of debt that's already been taken on?
The role of the dollar as a storehold of wealth, there's two purposes of a currency: a medium of exchange and a storehold of wealth. And because of the imbalances and the supply demand that is baked in as we now need it, and also take the political issues and the types of spending that are being demanded, required, I might say, that means that imbalance will exist. And so you are, I think, for the foreseeable future, that it will not be an effective storehold of wealth, as it is now not an effective storehold of wealth. That drives not just to other currencies, there are other currencies, but other countries are in this type of position too, to some extent. And so you see Europe and Japan, which have the three old currencies and so on, in somewhat similar positions. So you see the poor storehold of wealth being reflected in other items going up, because you measure them in dollars, but it's really the currency is going down. So we've entered a period of time in which the question will be, what will be the money of the future? What will be the monies of the future? Increasingly, there will be a competition of monies as a storehold of wealth. There'll be competitions for storeholds of wealth. Now, that could be your real estate, it could be your stocks, it could be your gold, it could be your Bitcoin. Those are the choices. But those assets as a whole will you'll see the movement into those. You will, in other currencies, such as China's renminbi, you will see gradually an increase in the usage of those currencies at the same time. But don't just look at it as other currency. Look at it as other storeholds of wealth.
And you would argue that some of the explosion of excitement over Bitcoin and cryptocurrencies is just this general desire to move away, to diversify away from the dollar for the reasons you're mentioning.
That's right, because a dollar, a cash, and a bond, which is a promise to receive dollars, are being depreciated. And that's right. So you will see those as digital gold. You will see other currencies. You'll see probably China's renminbi, which will increasingly be, they'll have a digital renminbi, and there'll be choices.